Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and guess what? Today is John Deaton's birthday. What better way to give John Deaton a birthday present than to donate to John Deaton's campaign? You can go to johndeatonforsenate.com and donate to John. Great day to do it. All right, moving along. This is wild. So this is from Zero Hedge. Market breaks as multiple New York Stock Exchange trading halts see Berkshire wipe out 100% of its market cap. I don't know what's going on here, but I said so. Wall Street removed the sell button. Anytime things go south for the big Wall Street guys, they make sure that they fix it so that they don't lose any money. Anytime things go south for crypto, there are no trading halts. They just let the retail people get killed. That's the way this world works. Here it is, Warren Buffett's Berkshire Hathaway down 99. Now that's a red candle right there. 99% due to glitch affecting multiple companies and wiping out hundreds of billions of dollars in value. Cool Linda P. Jones tweet. All the highly shorted stocks are up. Now that Bitcoin and Ethereum have ETFs approved, there is systemic risk to the stock market, banks, bonds, crypto, pensions, and currencies. Time for a new financial system. Quick, bring in a solar flare and take it all down. Good thing there's a parallel financial system ready to go. Then we got this. Coinbase has followed Ripple and A16Z in donating $25 million to Fair Shake, one of the PACs hoping to drive pro-crypto candidates into Congress this election. Metal Lawman made us aware of something here. The reported settlement between the SEC and Do Kwon is good news. It means that either the Ripple case or the Coinbase case on possible interlocutory appeal is likely to be the first case to get to the Second Circuit Court of Appeals to address the legal status of crypto assets. Then we've got this from Bill Morgan. Incredible growth in XRP on the AMM in the last 10 days. XRP on AMM grows by 1.49 million in 10 days. Essentially, the locked XRP in AMM pools, which was approximately 3.7 million as of April 24th, has increased significantly by 40.27% by June 2nd. This represents an addition of 1.49 million XRP in less than 10 days. Can't complain about that or this. MC Squared Finance has received a grant from Ripple to build on the XRP ledger. That's good stuff. Then we got this. This is an interesting clip right here. I've never heard this before, so I'll let you hear it.
Did you guys hear this rumor that SBF was going to put $1 billion into the election and convince Tom Brady to run as a Republican?
And give the $1 billion to Trump.
Oh, sorry, give the $1 billion to Trump.
He was going to give Trump $1 billion to not run.
Okay.
And then get Tom Brady to run. I mean, this person had delusions of grandeur. He thought he was a Jedi Knight, and he's like literally in Jabba's palace right now. I don't know what what a lunatic he was. I mean, talk about delusions of grandeur, Sachs. This guy thought he would just drop $1 billion and convince somebody not to run for government.
Yeah, he acted like somebody who had been handed a money printing machine via the politicians in D.C., which is exactly what he was allowed to do. More on him in a minute. You got to see this. A guy literally sat on stage at Consensus and told the truth.
99.99% of the projects at this conference are complete and utter bullshit. They have some fancy white paper. They make all these crazy claims, right? And their purpose, if we ignore, what they are trying to do, yeah. Glad that that's sort of known. But, their purpose is really to print a token and dump it on retail investors.
That's exactly right. And guess what? And also, none of them are regulatory compliant. None of them have legal regulatory clarity. Linda P. Jones again with a good one. He explained why Ripple needed stablecoins. A par exchange rate with the US dollar would eliminate the exchange rate volatility. Now you don't even have risk for 3 seconds. Listen to this. This is a guy named David Andolfato from the Federal Reserve. Maybe previously, I don't know if he's still there.
That is, people say, how can you trust, the Fed to do the bookkeeping? I mean, like I said, my response is, you don't expect the Fed to kind of steal your money. I mean, if the Fed can print all the money at once, it's not going to like mess around with your bookkeeping. So, we have this big spreadsheet, the blockchain if you want, but it's just managed by the Fed. And it's very cheap, much cheaper than Bitcoin, if you're willing to delegate the responsibility to a third party. But then the downsides to all of that, of course, is you'd actually, suppose you didn't want the Fed to be responsible for processing the payments. I mean, suppose, the Fed will likely impose some KYC restrictions on some purchases. They might not process some purchases that you might want to undertake. And so it was at that point that I said, well, we could, if we wanted to, extend the concept one step furder. I'm not saying that this is ever going to happen, but just conceptually, you could imagine not FedWire for all, but kind of like a Fed coin, where what the Fed would do is actually just issue these, Bitcoin-like objects, but and they would enforce a par exchange rate with the U.S. dollar. That would eliminate the exchange rate volatility. But they could delegate the clearing of these payments to some third party, some sort of Ripple-like protocol, or possibly even Bitcoin. I mean, we could delegate the responsibility of processing these electronic, Fedcoin payments to the miners. And the idea there would be,
Okay. Now I want to show you this. This is a gold prediction from Jim Rickards. This is pretty interesting. I'm not going to play the whole thing, but I am going to play you a good amount of it here.
Was your recent forecast, which you say, look, I didn't just make this up, but you could see gold, I'm not saying in this year or next year, but heading towards 27,000. You say, look, this is not just a number you're making up. We all know, anyone who knows you, Jim, knows you do. You take deep dives, you do a ton of research. So I'd love for you to walk us through how you got to this number and in what time frame you think this could happen in.
Right. Well, there's a predicate, so it's a little bit different than a hard and fast prediction. I did. The number was about $27,000. You're right. There's a predicate, which is what happens if investors, savers, markets around the world lose confidence in the U.S. dollar. And by the way, if people lose confidence in the U.S. dollar, don't think for a minute that they're going to run to the euro, the yen, pound sterling, Canadian dollars, or whatever. They're not. All those currencies are part of a global euro dollar, US dollar system. So if you lose confidence in US government securities, for example, the US dollar, you're not going to run to German bonds or Japanese government bonds. That whole system is going to be severely impaired. In which case, you may have to go back to some kind of gold standard, gold linked, gold backed in some fashion, not because you want to. There's no central bank in the world that wants to go to gold, but they may have to restore confidence. Now, if you do, if you say, okay, we have to get back to some kind of gold system to restore confidence, what would the price of gold have to be to make that system work? Well, we have a lot of historical precedent. There was a real gold standard from solid gold standard from 1870 to 1914, modified gold standard from after World War I, say 1919 through World War II, the Bretton Woods standard from 1944 to 1971. So we do have precedent for this. In every case, you don't have to have enough gold to back 100% of the money supply. Some of the hard shell gold bugs say you do, but that's not true. Historically, you need between 20 and 40%. So let's just take 40%. Look at the U.S. money supply, and I use M1 because it's broader than Fed-based money. It includes checking accounts. It's kind of like the money from the banks that drives the real economy. So if you take M1 and take 40% of that, and say, okay, that's how much gold I need to back it up, and then say, okay, how much gold do I have? The answer is 8,133 tons. That's how much gold the U.S. has. And just do the math. This is, as I said, this is seventh grade math. What would the price per ounce have to be for 8,000 tons to back up M1? And the answer is $27,000. By the way, I did the same math not that long ago. Well,
$27,000, folks. That's unbelievable. Now, let's talk about, those stable coins, the Ripple stable coin and Tether. regulated stablecoins versus unauthorized stablecoins. In the next weeks, exchanges such as Binance will make phased changes to unauthorized stablecoins. Tether, reminder by Brad Garlinghouse, that means there may be shifts in market share. Ripple's RLUSD is coming and is superior to most other stablecoins on the market. Folks, if my son was not now 11 and still drew pictures, I would get him to draw you a picture. This is not hard to figure out, folks. It's like we're finally bringing regulated crypto in for a landing. Brad Garlinghouse it's like he's trying to be nice and tell you what's about to happen. Some aren't listening. The digital asset investor is listening. Now, speaking of Tether, I'm gonna contrast Ripple and Tether here in a minute and let you just tell me if you're going into a regulated crypto world. I'm just gonna let you choose. That's what we're gonna do in DAIXRP.com. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that here we go.